Happy Tuesday, traders. It is Tuesday, the 3rd of April, 2018. It's 8:01 a.m. Chicago time. Thanks for joining me again. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. The market is allocating to risk slightly this morning. Definitely risk off yesterday. Yesterday's session exceeded most normal parameters or metrics. The leader this morning is the NASDAQ, up 66 and a quarter off a settlement, up 1%. Big bounce this morning. The Dow is up 179, up 0.76%, trading at 23,728, followed by the S&P up 19 and a quarter points, up 0.74%, and the Russell also up 0.74%. So the major indices are all trading higher this morning. The DAX is, now that the European markets have reopened, the DAX is way lower, catching up, trading down 70, well, not way lower, down 78 points, 0.64%. The Euro stocks down 13%. Those two indices were spared yesterday's action as they were on holiday. But overall, the market seems to be allocating to risk this morning. Let's take a look at what we've got. So, looking at this week, today's calendar is quite empty. Not much there to talk about. And pretty busy tomorrow with the ADP and, of course, non-farm payrolls on Friday. So you got to keep that in mind coming into the week. I'm not going to go through the calendar, but just remember that we have non-farm payrolls come Friday, and we're likely, that's a key release for the month. But today, the deck is clear in terms of economic releases. Here's what we expected yesterday. So, way off. The anticipated action yesterday based on Friday, given the way we ended Friday, what we had Friday is almost pretty much a trend up day. Took back the sell-off, balanced at the low. We extended the impulse down, so impulse down, pullback, continuation, consolidate, and the next leg is expected to be up. And that's really what I was going off of. Also going off of Easter Monday, looking back historically, generally this has been a relatively quiet day, and we are opening in range in value, even though there isn't really value. The expectation was for the market to test down and then just hold the point of control of Friday and basically be in balance. Again, way off on that play there. The secondary, again, a push up, push down, and then ultimately start to drift up into the close is the second scenario. The third scenario is somewhat of what ended up working out, a push to 2640. And then we sell off and start moving towards the lower end of the range, consolidating around 26.15 before the bounce. And again, this, that had a pretty good chance, and that's really what, unfortunately, for those of you who are at Convergent and were looking at the posts that I was making, it definitely, I didn't trade the movement down very well because of the expectation that it would be an outside in a day, and I would be playing from the edges in, given those parameters that I just spoke about. But it just didn't happen to play that way. What we ended up getting is we pushed to 2638 rather than the 2640 stock zone, and then we sold right off, and we just blew right through every stock zone I have. Areas, and again, what are stock zones? Stock zones are areas where I expect the market to respond, and these are the areas where I would engage with the market. So if I have a long bias, I'm usually waiting for the market to pull into a stock zone or pull back into the stock zone once it tipped its hand and shown that it's got strong movement in the direction of my bias, and then enter in or around the stock zone area. So these are areas that are built on classic support resistance, price action based, but also on some statistics and then volume profile based, combining some volume profile based action as well. This is something that's going to be covered next month or in a couple weeks in a webinar, Convergent anyway. So we ended up selling off way through the 2600 century figure, taking out basically the multi-day balance, this 4-day balance here. Or actually, it's a longer one, 2, 3, 4, 5. 5 days of balance. We ended up taking that out. Lots of energy to the downside. And of course, everybody's got a reason for why this is happening. Many people foretold it, and there it is, and so on. Overall, the SPX, the cash index, tested the 200 moving average, tested also a long-term trend line, and is trying to hold those levels. Where's my fundamentals chart? There it is. So this is what we've got. This is the SPX, and the green line here is the 200-day average. This is a daily bar chart of the SPX, and we have a trend line that was beneath us. We finished above the trend line, and I think I just moved this. Let's correct it. Yeah, it's 200. And it's struggling here. Of course, I don't trade off of that trend line or anything like that, or the moving average, but it's important to see what everybody else is looking at. And so coming into the close of yesterday's session, we had a negative 58,000 delta at the bottom, somewhere near the bottom there, and the market bounced up. But you notice that delta didn't bounce up at all. You can see that here, that the market turned up, heading towards the mid or so, and the delta just couldn't care less. There was really, this float up was more on short covering into margin calls into the close, rather than aggressive buying. So we have a pretty good bar here, volume bar on the last 15 minutes of the cash session, but there's just no action on the delta. There's nobody there who wanted to lift this thing. Now, the point of control was not at the low. Had the point of control been down here, and the market closing around that point of control, the expectations for a lower low. Instead, the market had no desire to go lower. This is what it looks like on the heat map. This is an all sessions, and this is basically where yesterday started, right here at this line. This is where the 8:30 Chicago time pit session opened. And it bounced up, and we've got a drift upwards since the reopen yesterday. So it's really looking like the market is struggling, is trying to find a base. The reason many outlets say that this is taking place, there are several. We finished the first quarter, so the allocation, there's an issue with allocating immediately to sustain the buying, but also the fact that China is making some aggressive moves on tariffs in response to the U.S. Imposing tariffs with the current administration and stuff, and that's likely to impact. That's causing an environment where a lot of sectors could be impacted. At least that's the excuse. Not that matters. It really doesn't matter to us. The fact is, the market could not hold day time frame levels. intermediate time frame levels, and it just blew right through a lot of areas yesterday. It did not respect any of the technical levels, and so it was pretty aggressive. We traded twice the volume, the normal daily volume, and then the overnight session is trading about twice the normal volume as well. So that's the context we're coming into today. Okay. So here's where we are. We open up the entire inventory. The overnight inventory is long coming in. I expect a small response to the downside towards towards this 2585 area. The overnight profile is fairly balanced. We have a pretty good range in the overnight, about 21 points, which is wider than normal for the overnight session. There's definitely some good participation. And remember, yesterday I said that I'm expecting some fireworks on Tuesday, and the market just couldn't wait, and it did its thing. So we had the movement that was expected today, yesterday. Not that I would have predicted that it was going to push this far, all the way down to 2550. But that's, right now the context is the market is pulling back to yesterday's mid, the mid of the sell-off, and it's likely to struggle a little bit up here. What am I expecting for today? Let's shut some things off to clean this up a little bit. So this morning, coming in, the expectation is for the market to be responsive and pull back into yesterday's close and point of control. I'm expecting this to form a base. I'm looking for an impulse up on the pullback, and then for the market to continue to attempt to push from 25.75.50, which happens to be a stock zone, 25.75 and a quarter, in that range, all the way back up to 2600. I expect it to consolidate here and push into the next area, which is 2613, 2615, which has been a key figure for the last week and a half or so. And so I'm looking for the market to dip. I'm looking for a buying opportunity on the dip, and that's the main scenario for today. I think we have a pretty good base below us. There are several signs on the SPX that shows that there's a good base. There's a decent base here, and I'm looking for an upwards push. Now, if we open and push through and fall through the open and are not able to hold this point of control and the closing price, then we're likely to revisit and continue the impulse that we had yesterday. And I'm looking for 2540 to the downside. Okay, so that's it. Remember, figure out what you did yesterday that needs improvement. I saw a lot of people just stepping all over themselves when it comes to risk. It's unfortunate, but it's the market's going to repeat it again and again and again. It's going to take your money. So just make sure you identify what the problem is and adjust your plan accordingly. Understand yourself a little bit better every time. So that's what we do to win the day every day as professional traders. Okay, good luck.